Sir Martin Sorrell, CEO and founder of WPP, the world's second largest advertising firm.
No, not yet. We will be when
this deal closes.
When and if it closes.
You're holding on to the #1 spot.
Well, we've been #1 and #2 and #1 and #2. So we've got and actually, when you're #1, there's only one way to go, isn't it?
Well, perhaps you could get bigger. We're going to talk to you about your acquisition strategy in the ad business in a bit. But first, on Twitter and its ad business, how optimistic are you?
Well, you know, there's the euphoria. I mean, listening to you ladies talk about Twitter, I mean, it's like it's extraordinary, absolutely extraordinary.
Well, we all use it.
It's another successful IPO from Goldman. Well, the fact that you use it is one thing. The question is whether advertisers will use it or not. And I think
What's the answer?
Well, I think the answer is we don't know. There's a lot of leaps of faith. I mean, you're talking about 12 times revenue multiples, which are extraordinarily high, and despite comments to the fact that tech valuations are always going to be extremely high. I think we just have to wait and see. Twitter adds to the armory. Our relationship with Twitter is not a relationship where some of our competitors or one of our competitors has guaranteed. We don't believe it's right to guarantee our clients' money to a medium, unproven medium, willy-nilly.
Do your clients like Twitter?
Wait a minute. We don't think it's right to guarantee. What we think is the right thing to do is to work on the data piece. So what we've done is entered into an agreement with Twitter in the UK now and in Spain. It's being rolled out around the world, using the engagement data to demonstrate, interestingly, to free-to-air television. That free-to-air television may well be a little bit more powerful in terms of live events and consumer engagement than we thought. Now, do our clients like Twitter? I think they like it, but that's not the question. The question is whether they're going to use it. Now, if our spend with Twitter is up, and it's very small. I mean, if you take Google at 2.5 billion, our normal sort of tech spending of Facebook around 400 million. I won't even mention the figure for Twitter because it's much, much smaller. It's true that Twitter's revenues have doubled in this year, in the year of flotation, and people are looking for very significant increases, not quite doubling, but close to it next year. I think the jury is out. I mean, there's a lot of, if you look at markets, you said a minute ago whether tech stocks were going to rise post this IPO. They've risen pre the IPO. If you look at the markets in the last few days, for example, in the media sector, they've been extremely strong. We've seen some very big, some small companies with very big valuations. Criteo, Rocket Fuel.
Yeah, I mean, it's across the board.
Yeah, across the board. So it's, and there was another speaker from London, actually, just recently on Bloomberg, just saying, you know, we're in the foothills of a bubble.
Are we, Paul?
I don't know. I don't know.
Paul, I'm curious what you think about that.
No, you know, I mean, there's always these little sort of paroxysms, these enthusiasms in technology where people just go nuts and they say everything's going to go straight up. But I mean, the reality is that's the way tech has been since, you know, in '83, when really sort of the modern tech IPOs were really beginning to take off.
But the simple fact is that we haven't seen the monetization yet.
But we said the same thing about Google. We said the same thing about Facebook. No, we say the same thing every time. This is a story that we've told many times.
He's running the check, Paul. I don't know.
Wait a minute. No, you can't get away with that. Google has 5 legs. Right? What
percentage of Google's revenue is from advertising?
Hold on a second. Very substantial.
Right, one leg.
You know, what's our relationship with Google? Do you know how much it is?
No, but that's your point. I'm not going to dissect your company.
How big is our relationship with Google?
I'm not going to dissect your relationship with
$2.5 billion.
But my point is,
and with Twitter, you can't even count it.
Yeah, right. It's because it's in its infancy.
Right,
that doesn't mean it won't be successful. But just to your point, it's 5 things, right? So they're in display, they're in search, desktop search, they're in video, they're in social, they're in mobile. Facebook has a way to go. Twitter has a way to go. It doesn't mean it won't be successful, but it means that I think what we have to do is wait and see whether it's proven. There's a triumph of hope here at the moment.
I think that's true. I think the risk, I think that's absolutely true. The risk here is that if you're thinking about it as an observer and as a user and a buyer of its advertising platform, thinking of it as an investor, you have to take the exact opposite perspective. If you wait till, hang on one second. If you wait till it's proven out, what's going to happen? You're going to say, oh my God, I missed that. It's gone. The story has changed.
We wouldn't be sitting here in Bloomberg at 6 o'clock in the morning if we had successfully anticipated all the things that you're talking about. We wouldn't have to do that.
It sets up a great debate. We've got an investor here. We've got an advertiser here. We're just getting started. Love conflict at 6:09 in the morning on Surveillance.